Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I figured that we would jump into the 4-year cycle theory, taking a look at the entire price history of Bitcoin and sharing with you guys exactly why I believe we're going to be seeing a cycle top at the end of the year. I have some really cool chart patterns to share with you guys that are following once again so identically to the prior cycles that it will blow your mind. We are all going to set ourselves up to make so much money over the next remaining 5 months of this bull cycle, and the people that are prepared right now, understand how the 4-year cycle theory works, are going to cement themselves as the top earners in this cycle. Are you going to be somebody that ends up cashing out at the top, or will you be the retail investor that buys the top and then ends up crashing and losing all of their money in the bottom? I'm going to teach you guys the exact strategy for how to stay ahead of the market in today's video. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server of over 20,000 members and growing. If you guys want to sign up for the rest of my community, share your own thoughts on the market, I have a link in the description to go ahead and sign up. On top of that, if you're new, just getting into these markets, maybe you just want to further your own education on how to be more profitable, I have a link in the description to also download my free ebook and beginner's guide to cryptocurrency. This book is going to help you guys out tremendously, just as it's done for me, which is why I've made it free to download. Links are provided for you in the description. And with all that being said, guys, let's jump right into this amazing video today. Alrighty guys, so here we are taking a look at Bitcoin. This is the log chart looking at the whole entire trend and price history that we have to go off of. And I'm going to be sharing with you guys some different factors, some different technical skills that I actually use when applying to these charts to share with you guys why I think that there's so much data to pinpoint to the fact that the 4-year cycle theory is the most identical theory that we could possibly follow in order to make the most profit for ourselves. Now here's the thing guys, I've been following this plan for over 2.5 years. I've been studying it. I've been following it because there is literally nothing that is this accurate. And I will share with you guys one indicator once we talk about this that I think is a great model to go off of. And you guys can actually follow this trader on Twitter and you're going to be able to follow this indicator that I'm talking about. But when it comes down to the technicals, when it comes down to time frames, you guys already know I've been very big on the time frames because I felt like the best way to scale out, the best way to enter into a market is actually through this 4-year cycle theory and the time frames that coexist inside of that. Now, there's a lot of different theories out there, the most popular one being the lengthening cycles. There's also the theory that states that basically this is the cycle where the institutions have jumped in. A lot of people are kind of on the fence thinking, well, you know what, I actually believe that this cycle is going to go much longer and it's going to behave more like a stock chart, where if you look at the stock charts, they've kind of just consistently been going up forever and ever, and they've never really had a bear market, right? Now, I see a lot of people throwing this conclusion out there. I see a lot of people that are saying, well, I'm just going to hold all the way through this cycle, and once the bear market rolls around, I'm just going to keep holding because I believe in my projects. I know that they are really solid with great companies, and because of that, you know, I would rather just hold instead of risking missing out on some gains at the top, right? These are all thoughts that I'm seeing thrown around Twitter, just thrown around by the crypto community in general. And I want to summarize a lot of things here, guys. I'm going to teach you guys a little bit of a strategy on how the 4-year cycle theory works. I'm going to share with you guys technical reasons on why I think that we're going to see a cycle top on the end of the year. And I'm going to tie it all together by teaching you guys why you should take profits, why you should not expect to hold through the bear market, and why the amount of money that you will make by selling the top and rebuying the bottom is enough to seriously make you a multimillionaire literally within 4 years. And it doesn't matter what you start off with so much. You know, you could have $10,000 that you end up making at the very top. As long as you sell that and reinvest at the low, that $10,000 could very easily become over $1 million with smart, timely investments. But the only way that you do that is by getting in at the right time and getting out at the right time. You don't have to buy the exact bottom or sell the exact top, but the people that understand the time frames are going to cement themselves as being top 90% of the market as far as buying and entering and exiting at a good price. So I think I've summarized enough. Let's actually dive into this chart. Now you guys are going to notice there's 3 different green boxes here. Now I wanted to ask you guys, what are the similarities here? Now keep in mind, ignore these black lines for a second, just focus on these green boxes. I wanted to share with you guys a little pattern here inside of each bull cycle. And this is a pattern that I've noticed, and I'm sure a lot of you guys have noticed. If you've been watching the channel, you're probably going to know what I'm talking about already. But here we are, guys. Notice how each bear cycle we have, 80, 90% decline. This one was about 94%, but you guys got to remember that this cycle was when Bitcoin had such a low market cap that it was basically the equivalent of a low market cap shitcoin, right? There really wasn't very much money inside of that. And so for Bitcoin to correct 95%, it's almost to be expected because there's just a lot of hype. It's just a lot of emotion inside of the market. Bitcoin had zero utility back in, right? So we're going to start right here and talk about, this pattern that's developed over the last 3 cycles. Now, this was cycle number 1. And if you're going to notice that we bottom right here, and then notice how we start uptrending, right? This is the very beginning of our bull run. This is where we start making higher highs and higher lows. And this is really where the trend starts. Now, you guys are going to notice here that once we actually start breaking those all-time highs, we get a big parabolic push, right? This is the push that takes us beyond all-time highs into new all-time highs into price discovery. And this is always where we get a little pullback. This is kind of what you would call the midway sell-off or the first sell-off in a cycle, and it's the very first major correction that we experience. Now, it's not always going to be the case, but this is the way that Bitcoin goes. We end up making a big leap past all-time highs, breaking into price discovery, and then we get a big pullback. In this case, this one was about an 80% drop, on average about 70% right around there. Now, what you guys are going to notice here is I want to share with you guys the time frames. Now, notice that this cycle tops here at the very top, and we're going to make this red. Notice how this tops down here at about April the 8th of 2013, right? That's where we get that midway sell-off. Now, if you guys are going to notice that this sell-off generally happens right around the tax year, right when smart money needs to pay taxes from prior investments, from other investment opportunities that they've had, whether it was business, whether it was just real estate, whether it was just other markets in general. There's always the tax season sell-off, and this is a very big staple in Bitcoin because Bitcoin is pretty much, at the hands of the rest of the market. Bitcoin follows the other markets. It follows the other indices, the S&P, the Dow Jones. All of those are correlated. And Bitcoin is more of a risk-on investment. And I think this cycle it's starting to kind of flip that narrative to being more of a safe haven for the first time. But back here, there wasn't very much money into Bitcoin. And so you're going to have these same cyclical sell-offs. And this is happening right at the tax season, around the April the 1st. We get this big sell-off. Smart money takes a bunch of profits. And then we kind of go sideways for a little while. Now, guys, notice here that after this first break of the all-time highs, a little pattern I want you guys to notice that this was the previous all-time high right here at this black line. We're actually going to remove this trend line here. This was the previous all-time high. The first break into price discovery, we get this big leap into price discovery, and then we get our first major pullback, right? Now, we never fully go all the way back down to retest that all-time high. We're usually kind of in a midway price where it gets close, it looks like it's going to fall down and touch that level, but it never actually does. And this is actually what takes us into our final blow off top to close out that bull run, right? Something along the lines of this. And this is literally where we kind of get that cycle top. This is what takes us into that very top of the cycle, the big euphoric blow off top. And then that's what precedes, a 1-year bear market, right? And so this is kind of the way that these cycles work. And you're going to notice this pattern repeated over and over and over again. Now, let's actually delete these black lines so it's just a little bit easier to keep track of for you guys. And let's talk about this secondary cycle because it followed pretty much the same pattern again. We start here, we build a parabolic trend, right? Higher highs, higher lows, same sort of pattern as we rally closer and closer to the previous all-time high. Now, we get our first major break past those all-time highs, and that takes place right here. Notice how we get our first big impulse past all-time highs. And if I actually draw a line here at those all-time highs, you guys are going to start to understand a little bit more of what I mean. This is the first major break into price discovery. And once again, what do we have? That midway sell-off. And let's actually see where that time frame stacks up. This one stacks up about June. So a couple months ahead of the last one. but nonetheless, pretty close to that same tax season sell-off. A lot of smart money begins to take a lot of profits in there. They need to pay off their taxes, and what do? Well, the market's high, so obviously they're going to sell out of their Bitcoin holdings. And so this is what we see here. Roughly the same sort of time frames, right around that late spring to early summer. We get that sell-off right into price discovery, right? Same thing. So we pull back, and then this is literally what takes us into that same final blow-off top to close out the bull run, right? We get one big leap into price discovery, new all-time highs, and this is what ultimately fulfills the cycle, and then we go into that same 1-year bear market decline, right? Now guys, you're gonna notice here that we've pretty much built the exact same accumulation trend once more. It can be slightly different, which we see with this overall uptrend in general. You know, we had this massive capitulation during March of 2020, right? The pandemic, a lot of people freaked out. And to be quite honest, guys, I don't actually think that this would have happened. You know, it really wouldn't have happened if the pandemic never hit. There was a lot of fear inside of the market. And so this is just a golden outlier of a great buying opportunity. It never broke below the 200-day moving average. And the 200-day moving average has perfectly predicted the cycle bottoms all the way since back in 2015. We didn't have enough price history to go all the way back in here at the time. But the 200-day moving average is oftentimes the very low end that a cycle will hit. It was the bottom here, it was the bottom here, and it was the bottom over here again on this in this March sell-off, right? So this is kind of this random outlier. Price immediately rallied back up to the mean of this trend line. And so we still pretty much see the same pattern here. It's just a little bit different, right? And so we can still track the same thing. We see prices make a higher high, higher low as we get closer to that all-time high. If we draw a line here at that all-time high, it'll take us to about here. Now you guys are going to notice again, once more, we always get one big parabolic impulse right into new all-time highs, and then we get that first sell-off. So once again, we're going to draw another line here right at the top. And this is going to be about April the 12th. And so in the cycle in 2013, we topped at about April the 8th. In the cycle in 2017, we topped about June the 5th. And then in this most recent cycle, we topped here at about April the 12th. So it's following a much more cyclical approach as what we saw in 2013. We had a big leap into price discovery. This one here, back in the last cycle, wasn't quite as parabolic. It wasn't nearly as big. And it happened about 2 months late. Now, this most recent cycle, we had about the same size of parabolic push as what we saw here in 2013, maybe slightly smaller because there was a lot less money in here back in 2013. But regardless, it's the same thing. We get this big leap into new all-time highs. Eventually, we have our first major pullback after that move. And now we're kind of just consolidating. Now, guys, once again, this is a pattern that is repeating almost at the exact same time in the exact same ways. And what is ultimately to be expected based off the last 2 cycles is something along the lines of this, right? One more big blow off top to close out this bull run. And this is literally the same thing that I've been watching for. I fully expected that we would have somewhere of a summer sell-off. In that summer sell-off, everybody was going to call for the new bear market. Everybody was going to get really bearish. And that was ultimately going to take us into one more big blow off top as retail comes in, as the news outlets start pushing Bitcoin and other cryptocurrencies really hard, as, you know, as billionaire people like Elon Musk start talking about it, right? This is what's to be expected in the final blow off top. And this is exactly what we're gearing up for right now. And so when we really take the time to zoom out, we can see that this is a pattern that's repeated very identically. And we aren't fully to the point of repetition quite yet because we have to go all the way up into another new all-time high. But regardless, guys, if you were watching for this 4-year cycle theory, you were watching this exact same scenario. I mean, you can't really be too unhappy with the way it's playing out because it's literally playing out just as like we've watched in the last 2 cycles before. So guys, this is a pattern that is repeated since 2011 basically, because remember, we bottomed here at pretty much the beginning of that new year, a little bit later, but winter, right? Winter is a time of bottoms, right? So right here, pretty much winter, November, the end of November. If we come over here, January, once again, the winter. If we come over here, December, once again, winter is always the time of these bottoms. And this is a pattern that is literally repeated over the last 9 years, even 10 years actually. 2011 would have been 10 years ago. So this is a pattern that is repeated many times over, and that's why I really think that it's important that we structure our trading plan with the intent of taking profits at the end of the year. So now that we understand some of those basic details, let's actually talk about another pattern that I wanted to share with you guys that actually has to do with the halvings. So for you guys that maybe do not understand what I'm talking about, Bitcoin halvings are literally the reason why we see a massive increase in price expansion in Bitcoin. And this is a pattern that happens every 4 years because it's actually programmed into the Bitcoin code. Every 4 years, the total amount of Bitcoin that are created based off of the mining reward, because you guys got to remember that miners process the transaction, right? They use these big computer farms to process these transactions to solve the overall hash in the Bitcoin blockchain. And once they actually solve that, they get rewarded a certain amount of Bitcoin. Right over here, it was something around 50. Right over here, it was about 12 and a half. And now we're all the way down to about 6.25 Bitcoin that are created every time a miner processes the block, right? Once they process that block, they're rewarded Bitcoin, and that's how new Bitcoins are actually added to the supply. Now, keep in mind, guys, that every single time we have one of these halvings, what happens to the price immediately after? Well, it skyrockets. Same thing here. It skyrockets. And what happened recently at the last halving? Well, the price skyrocketed. This is a pattern that continues to repeat, and it's actually the reason why we see such massive price expansion for Bitcoin. The miners, the price of Bitcoin has to rise substantially for the miners to still realize a profit. And the market does this naturally. We can see that the price has to increase substantially because the scarcity is now even added even further. Bitcoin's already a scarce asset. There's only 21 million of them ever. But then the amount of new Bitcoins that are actually added to that supply gets cut in half every 4 years. And that creates a supply shock. Hence the reason why the price increases so much. This is a really important pattern to understand because this pattern can also be implemented into the 4-year cycle theory. Now guys, I'm going to show you guys some of the time frames between this halving. Basically what we're going to do is analyze the market bottom until the halving, and then we're going to analyze the cycle top as well. So we're going to have 3 lines in here. The line at the cycle top will be red, the line at the cycle bottom will be green, and this midway line at the halving will be black. So we're going to go through here and we're going to implement this everywhere at the lows. So we get our green lines in here. Let's move this one slightly over, maybe a little bit over one more. There we go. Now we're going to do a red one at the cycle top. So there is red. So here we have these lines, these 3 lines that we're going to basically use to map out how the halvings actually have a very important synchronicity with the 4-year cycle. So first things first, guys, the way that this is going to work, I'm going to measure from the bottom of the bear market into the halving. So each one of these black lines represents where the Bitcoin halving was. It's not going to be 100% exact, but it's going to be very close. And if you actually go and Google when the Bitcoin halvings were, you're going to see that they follow almost identically to where I have these lines. It'll be slightly different, but that's not important. So first things first, from the cycle low of 2011 all the way until our first halving in 2012, our total amount of time was 378 days, almost exactly 1 year, right? Now, I'm going to show you something really cool. We're now going to take another date tool, and we're going to draw from the halving until the cycle top. Now, notice here that in the first one, from the bottom to the halving, we get 378 days, almost exactly 1 cycle year. Now notice from the halving until the cycle top, it's almost the exact same time frame. 364 days. It's just slightly different, right? Isn't that interesting how the same distance from the bottom to the halving is the same distance as the halving to the top? This is a really cool pattern, and I want to share with you guys how this actually works inside of the Bitcoin cycles. So now once again, we're going to take this same equivalent and go over once more. We're going to take from the low until the halving of the cycle in 2015 and 2017, and we get about 546 days from the low until the first halving. Now we're going to take that same equivalent and go from the halving until the cycle top. And what do we get here? Once again, very close to the same exact time frames. This was 546 days. This was about 518 days. So there was about a month difference here, but not a whole lot, right? Pretty close. That's even about half a month, about 2 weeks difference that we see here. Isn't that an interesting pattern that we can actually analyze from the low into the halving and from the halving to the high, and they're almost the exact same time frames that we see between them. So once again, guys, let's take this exact same pattern once more, and let's apply it to this most recent cycle that we're currently in. Remember, we go from the low of the bear market until the halving. So that equals about 518 days, about the same distance as from the last cycle, the halving until the top. Now we go once more. We go from the halving until, let's just say the same time frame as what this one was, 518 days. So 518 days is going to take us to about October the 11th. So let's draw another red line here to indicate the cycle top. Now guys, you already know why I've personally looked for the end of the year as the time to take profits, but for certain people that may be a little bit more conservative, they want to make sure that they're not trying to sell the exact top, they don't want to get too greedy. I really think that selling anywhere in the fall to early winter is going to be a great opportune time for people that have already made a lot, have already invested down here throughout the bear market and into the lows, 2020, 2019, 2018 type of people. This will be a great opportunity to get out because, I mean, based off of the last few cycles, you know, we do see some difference between the time frames. They're not always exact, but we see a very, very close similarity between them. I mean, this was only about a week or two off. This one was only a week or two off. This one will probably be about the exact same. So let's actually just go with about 546 days. Let's say that from the halving until the cycle top, we're going to get a bit of a lengthening one like we saw back here in 2016. Let's go to 546 days. So 546 days is going to be taking us to about November 2021, right around that winter time frame, guys. Now, this is just one pattern that I've actually used to apply with the 4-year cycle theory. And you guys can see Bitcoin is a very, very synchronistic chart. It follows the same time frames identically. Not only does it follow 4-year cycle theory, but it follows the halving cycles as well. And actually, the halving cycles seem to be perfectly programmed with the 4-year cycle theory. Ask yourself this, guys. Why would Satoshi Nakamoto program the halving to happen every 4 years if he didn't already understand 4-year cycles? 4-year cycles is a common instrument used inside of cyclical analysis. Many of the top traders that I actually paid money for follow this exact same frame of mind, specifically cyclical investors. And when you actually apply these same time frames to what we see inside of Bitcoin, you simply cannot refute the evidence that is sitting there right in front of your face. This is the exact reason why I don't necessarily subscribe to the lengthening cycle theory, because I think that there's way, way, way more data actually backing 4-year cycles than there is the idea of the lengthening cycle. I mean, the lengthening cycle pretty much hinges upon this first cycle, which you're basically betting a 10-year trend with a 1-year bull market when Bitcoin was worth pretty much nothing in market cap, right? It didn't take hardly any money for this to go into new all-time highs. And we're basically applying a 10-year trend between all of this here. Let's ignore that last cycle. This is a 10-year trend that is followed identically. Would you rather put all of your money on the table of a 10-year trend that is followed perfectly? Or are you going to throw away that 10-year trend for this random first cycle when Bitcoin literally had less than $50 million in market cap? These are just my thoughts and perspective when it comes into why I actually believe in the 4-year cycle theory and why you guys actually should too. So I'm actually going to keep this chart because I want to be able to share it in my Discord. But let's talk about one more pattern before we wrap up this video, once again talking about the 4-year cycle theory, and I'm going to share with you guys a little bit more detail in here on why I personally believe the end of the year will be the time to sell. So once again, guys, we're going to go through and analyze some basic patterns in here. We're going to analyze the bottom, which we're going to turn green. So we're going to go through here and analyze every bottom. Let's make a bottom there. Let's make a bottom there. So we have 3 bottoms thus far. Now let's go analyze the top. We have a top there. We're going to make these red. We have a top there. Once again, and we don't have anything into here, but we will actually map out, you know, based off of these time frames. So here's the thing I want you guys to understand here. So what we can see here is that we bottom right around the beginning of 2012. But the point that I want you guys to understand here is actually the winter times are going to be the time of reversal inside of the bull or bear market. They're actually both about the same. They top in the winter and they bottom in the winter. And this is a pattern that you're going to notice. So ignore the 4-year cycles for a second and just focus on the winter time frame. So here we have about the middle of November of 2011 as the cycle low for Bitcoin. Now notice here where we top at the beginning, or what I should say, the end of that bull cycle, around November of 2013. So we see that almost exact same time frame from a cycle bottom to a cycle top. All right, well, that's interesting. Let's actually apply it once more to the most recent bear market here in 2015. Well, I should say 2 cycles ago now. But here we have a cycle low at about January the 12th, 2015. This is where Bitcoin capitulated about 160 bucks, and that's what started the new bull trend here. So we topped, or I should say we bottomed here at about January the 12th. We topped here at about the end or the beginning of December, right? So we're still following these same winter thresholds. It happens generally the late fall, early winter, and that's about the time frame. Generally in the winter, though, I would just label, the end of November as winter at that point. Where I live, it's snowing at that point already. So it's the winter for me, right? So let's actually look at this once again. So we bottom here at about January the 12th. Where do we top at the end of that bull cycle? Well, about mid-December, once again, following perfectly to those winter time frames, right? Now we top here at December. Where do we bottom in 2018? Once again in December. Now this is an interesting pattern that I want you guys to understand. From the cycle top in 2013 to the cycle bottom in 2015, it's almost exact. Oh, wrong pattern here. Let's do that again. From the cycle top in 2013 to the cycle bottom in 2015 was about 1 year. This is a little bit longer than 1 year, but it's pretty close to 1 year in duration. Now, if we apply that same principle again from the cycle top in 2017 to the cycle bottom in 2018, this one was even closer to a year. This was 364 days. This was 413 days. And so we're noticing a pattern here, guys. We're noticing that historically, once Bitcoin actually developed enough market cap to truly be in a 4-year cycle, once there was enough liquidity inside of this market, the bear markets last about 1 year exactly, give or take, a month or two, right? This one was a little bit longer. This one was slightly shorter than a year by 1 day. But regardless, the pattern stays the same. In the same way that we analyze the low to the halving, from the halving to the top, being almost the same, give or take a couple weeks, we're seeing about that exact same number once more between the bear markets. The bear markets just last a little bit longer. This bear market lasted a little over a year. This bear market lasted about exactly a year, but we're once again seeing that exact same equivalent once more. So guys, what you're gonna notice here in that last cycle is if we actually analyze from the very top until the next cycle top, how long is this? 1,477 days. In fact, that is almost exactly 4 years. This is where the 4-year cycle theory starts to come in play. So if we analyze from the cycle low until the next cycle low here, 1,428 days. Once again, almost exactly 4 years. This one was slightly over 4 years. This was slightly under 4 years. But once again, that average, not the price, but that average time frame is 4 years. Now guys, this is why I'm personally going to be taking profit to close out the end of this cycle over here. If we take the same equivalence and we measure 4 years from the low, 1,450 days, I believe is the exact threshold, say 1442, we're going to see a top around the end of November to the beginning of December. And once again, if we draw the same equivalent from the cycle top, 1,440 days, we're going to go to 42. We should expect to see a cycle top right here at about the very end of November to beginning of December. Where did Bitcoin top in 2013? Well, the very end of November in the beginning of December. Where did Bitcoin top in 2017? Well, about the beginning of December. Still, once again, following those same time frames. And so I am personally expecting a cycle bottom at the beginning of 2023 very end of 2022, and a cycle top the very end of 2021, the beginning of 2022, right? So this is the exact reason why I'm personally expecting that we're going to get one more blow off top to close out the end of this bull run. We're going to see Bitcoin upwards of 200, 250K. Maybe it extends a little higher than that. I don't know. But when we really take the time to analyze the pure facts of the chart, what the data tells us from a technical perspective, we always get that midway sell-off in the middle of that tax season, right? April was here. Where does Bitcoin top? Right here, makes that first break into all-time highs. And that takes us to, once again, right around the tax season. Where did Bitcoin top? Once again here, after breaking all-time highs, once again, April, right around tax season. So in my opinion, Bitcoin's following closer to the symmetry of 2013. But it's still following just as identically to what we saw back in the last cycle as well. Every cycle is going to be a little bit different. It's not going to be following the exact same time frames. But guys, I think I've given you multiple different data points that perfectly show why the 4-year cycle theory is the superior theory in general, why you shouldn't be expecting to hold, forever and ever, why you guys should really focus on taking profits at the end of the cycle. Because guys, what is coming is the final blow off top. We can see this based off of Elliott wave theory. I've given you guys so many examples here. This was wave 1. This was wave 3. We're going to get one more final top to close out this cycle. We need a wave 5 before this cycle's done. Not only are Elliott wave theory perfectly showing that we need one more blow off top, but based off of the history of the last 10 years of Bitcoin cycles, we always get one more blow off top after that midway sell-off. The midway sell-off happens around the tax season. April the 8th here, April the 12th here, July, or I should say June, back in 2017. Once again, what produced directly after this breakout past the all-time highs, right? Because the previous all-time highs here, we break that all-time high, we have a sell-off, and then we get one more blow-off top to close out the winter. Same thing here. We break the all-time highs, we pull back into that summer sell-off, and then we get one more blow-off top that takes us to the end of the year. What is happening once again? Well, we get that midway summer sell-off right after the break of all-time highs, happens at the same time frame around tax season. And what is the chart showing us once again? Well, that we're going to get a blow-off top to close out the end of the year. This is my data. This is why I'm taking profits at the end of the year. As somebody who didn't take profits at the end of the year in the last cycle, as somebody who made a lot of mistakes and lost all my money in the last cycle, I am simply not repeating these patterns. I'm simply not repeating these bad habits. I am taking all my profits. I am holding fiat. Fiat is still king. And you guys that are saying that you're going to hold crypto forever, you are going to be in for a rude awakening come the bear market when the cycle flips. And people think, oh, wow, well, you know what? I'll hold to an 80% drawdown and I'll just buy more. Well, your altcoin does this. It goes down 70%, then it bounces 20%. It goes down 70% or 30%, whatever it is. It basically makes higher highs and higher lows until you start to see your profit, which could be, $10 million at the top, all of a sudden drop all the way back down within 6 figures. This is something you're not going to want to see happen. This is where you start getting overly emotional, end up panic selling the market bottoms, thinking, oh my gosh, I just had, $10 million. Now all of a sudden I have, $100,000. All of my alts are crashing. I still have, these things that I need to pay off. I have debt. I have all of this stuff. I'm just going to sell. I'm going to realize all of my gain. I still have $100,000. And that ultimately puts you right here at the cycle bottom. Who's going to be the person that accumulates all of your panic selling? Smart money that sells the cycle top. As somebody who has experienced what it's like to hold through a bear market, as somebody who made that mistake and watched as, I trapped myself into these ways of thinking, oh, well, the institutions are going to be here. They're going to just drive the prices. It's going to turn into a stock chart and go up forever. This is the same psychology that leaves you trapped inside of a market cycle. It leaves you without taking profits, watching all of your unrealized gains evaporate into nothing. And let me just share with you guys a quick example of many of the altcoins of the last cycle, many of those top performing altcoins. Let's go take a look at some of these here. So this was an example of Stratus. Stratus was a very, very great performing altcoin. Tons of hype around it. Everybody thought it was the future. What happens? Well, it makes this great big bull market. Very parabolic. Everybody that bought got rich. And where do we see it today? We had a massive sell-off. I mean, chances are you're not going to buy the very, very bottom of these cycles. This thing almost fully retraced that entire move. You would have been 1000x up here, and at this point here, you maybe would have been up 10x. That is a big difference. You do not want to leave that type of money left on the table. This is just one of the many examples. We have also BitShares was another really big project at the time, created by the creator of EOS. Once again, same thing, massive bull cycle, but once you start crashing, it pretty much evaporates all of those gains that you had. Even coins like XRP, same exact thing. I mean, you still would have made a lot of money because XRP held support much better. But regardless, guys, this is a lot of profit left on the table. Had you have sold at any point in this final blow off top, knowing the 4-year cycles, knowing that the time frame to sell would be the end of the year, you could have had, $10 million here compared to $1 million here, or, 800K here. $10 million, even if you buy the dip here and don't buy the exact bottom, that compounds to such a massive amount that it only takes the timing of one cycle, you selling close to the top and buying close to the bottom. That seriously is a huge amount of difference. The amount that you're going to compound, the amount of ROI that you will compound in that following cycle will be so monumental that the people that trap themselves in the way of thinking, oh, it'll go up forever, oh, I'll just hold, I'm with good companies. Let me show you guys one more key example here. Let's go with the Wall Street. Oops. The Wall Street cheat sheet, guys. This is the ultimate indicator to use when it comes to looking at market cycles, because this is the emotions that you're going to feel. This is going to be a long video, but I just felt very obligated to teach you guys why it's so important to take profits at the end of the year. I don't care how long this video is. This is a very important video, probably one of the most informative videos I will ever make on this channel until the end of the year. This is the same psychology that you will all repeat, and you are repeating it right now as it stands. This is the way it goes. The very bottom of the cycle is disbelief. The very bottom of the cycle, you get that first higher high. Everybody says, oh, it's just going to go lower. Bear market is still here. There will never be new all-time highs. I remember seeing it so often when Ethereum was less than $200, when Bitcoin was still under 8K. There were so many comments, if you go back and watch them on YouTube, so many people saying, oh, no, this guy's an idiot. Oh, the cycle will never break new all-time highs. And then you start to see this happen. You start going higher. This is where you start going close to the all-time highs and breaking those all-time highs. Hope. A recovery is possible. All the retail gets excited. Oh man, maybe I was wrong. Oh, I better jump in. And then it starts going parabolic. Optimism. This rally is real. Belief. Time to get fully invested. Thrill. I will buy more on margin. Gotta tell everyone to buy. Euphoria. I am a genius. We're all going to be rich. The super cycle is here. Institutions are never going to sell. And then what happens? Institutions sell. They dump on your ass. And then we get complacency. The first lower high. I can share with you guys the exact time that happened in that last Bitcoin cycle. Right here. This is euphoria. This is complacency. And this is the bear market. What did all of those idiots do that thought it was going to go up forever? Well, they felt anxiety. Why am I getting margin calls? This dip is taking longer than expected. Denial. My investment are with great companies. They will come back. I'm seeing people in denial right now about selling. They're saying, oh, I'm in the best companies. Oh, utility will drive this forever. And they're pretty much doing this one in here. And that's what's going to prevent them from taking profits at the cycle top. And then you get another one. Panic. Oh, shit. Everyone is selling. I need to get out. Capitulation. I am getting 100% out of the markets. I can't afford to lose more. Anger. Who shorted the market? Why did the government allow this to happen? Depression. My retirement money is lost. How can we pay for all this new stuff? I'm an idiot. And then what happens? Well, we repeat the cycle over again. We get our first higher high, disbelief. This is a sucker's rally. This rally will fail like all others. And then what does the market cycle do? It does it all over again, repeats the same exact thing again, breaks out into new all-time highs. And then right when everybody gets fully invested, the rug pull happens and they get caught with their pants down. Guys, look at this little chart over here. The peak point of financial risk is when the prices are at the highest. The trough is the point of maximum financial opportunity. You want to be buying in at the lows. When everybody's telling you you're an idiot, when everybody's telling you that it'll never make a new all-time high, when everybody's telling you it's a scam, that is the golden opportunity to be buying into a market. And you want to be selling once everybody gets very optimistic. Once you start seeing all of these people talking about the super cycle, once you start seeing these people talk about, how the institutions will never sell, because, they're not going to sell because they're only buying just recently. They're only going to qualify for short-term capital gains when the institutions want to make the most money for themselves. Guys, there's a big news flash here. The institutions didn't just recently start buying. They've been buying since 2018. Who do you think shorted the exact cycle top when the futures opened for Bitcoin? The exact day that Bitcoin started crashing from the cycle top was the exact day that Bitcoin CME futures opened. For the first time ever, institutions had an on-ramp to actually short Bitcoin at high leverage. And these are people that actually have a lot of money to do so. It's not a coincidence that the exact cycle top for Bitcoin at 20K was the exact day that the CME futures opened. And if I actually share with you guys the CME, let's actually go to this chart here because I don't want to ruin any of these. CME futures. We're going to go to here. We're going to go to Bitcoin. Bitcoin futures. All right. Let's try and find it. I don't know where it's at. Look over here, guys. Why is it that the exact day that Bitcoin futures opened, Bitcoin was at 20K? Is it coincidence that the exact day that that opens is just so happens to be the exact cycle top? Guys, coincidence doesn't exist. You're either an idiot who gets dumped on by smart money, or you're somebody that actually has enough understanding to see the bigger picture of what is going on. This same thing is going to happen again. Smart money will take profits. Guys, smart money was shorting here. As retail was panic selling throughout this period of time, who was realizing a gain because of their shorts? Who was paying their shorts? You, the retail investors that didn't realize what was going on. As everybody was selling, as everybody was getting out of the market, as everybody was repeating these emotions, the people that had shorts at the top, the people that were selling to them, that's how they accumulated all their Bitcoin. So the idea that institutions have only been buying just recently is completely dumb. It's the dumbest thing I've ever heard, because here's the thing, guys. They accumulated from the cycle top at the beginning of 2018 all the way through before the halving. And even then, they've kept accumulating. They've been accumulating for so long that they don't care if some of those positions they have to hold through the bear market, or if some of those positions they actually have to sell at a 30% tax compared to a 20% tax. It does not matter to them because these institutions run the market. They have made so much money off of this cycle that it doesn't matter. So guys, this is the video I had for you. I got really passionate about this because I just see a lot of people that are going to repeat the same mistakes that I did. I want you guys to be able to learn from those things. I've made a lot of money this cycle, and I'm planning on taking all of that profit and rebuying the next cycle bottom. I want you guys to be right there with me. I want you guys to be able to go through this bear market and be happy, to be able to go on vacation, to be able to buy a new home, to be able to do all these things that you've basically previously planned for so long. Most people have these big lofty goals and expectations. A lot of you guys have met and surpassed a lot of your goals and expectations. And I want to make sure that you guys ultimately keep that money to, pretty much manifest all of the things that you wanted. A lot of you guys want to buy a house. A lot of you guys want to buy a car. A lot of you guys want to pay off debts, take your family on vacation, do all of these great things that you probably never have been able to do. Well, the only way you're going to be able to do that is to actually take your profits, and we really need to make sure that we're taking profits at the end of the year. So guys, I hope this video helped. If it did, leave a like, comment, and subscribe to this channel. Hit that notification bell so you don't miss out on any of these amazing videos. If you guys would like, I have a Discord server you guys can join. I also have a free ebook that you guys can download. For the people that would actually like to sign up for my VIP, I have a video course. I also have signals where you guys can copy my trades. Links are provided for you in the description for every single one of these things. Thank you guys so much for watching this video. Thank you guys so much for the support of this channel. You mean the world to me, and that's why I want to be able to give back this knowledge learned. Learn from my mistakes. Don't repeat the mistakes that I had to learn from. Simply just listen to the people that have actually made the mistakes and the people that understand how these cycles work. I'm very confident in my long-term plan, my trading plan. And I'm telling you guys, the people that follow this trading plan are going to set themselves up for a great financial opportunity. Thank you guys so much for watching. And with all that being said, I'll catch you in the next one. As always, peace out.